Hello, everyone. Welcome to the inaugural episode of Steady Lads. So my name is Justin. I'm the co-founder of Astaria. I also have a DeFi-focused YouTube channel. I'm joined by Taiki. He is a humble farmer and influencer. He has a pretty prolific YouTube channel in this space going over yield farming. We also have Jordy. He's a full-time game theorizer. He is the CIO of Selena Capital, a multi-strategy hedge fund. And last but not least, we have Alex, who is a junior analyst at Scimitar Capital and also a prolific threader. So welcome, everyone. I think the big news that we want to discuss today is right before this podcast started recording, we got these GDP numbers that US GDP growth was, I think, something like 2.4% annualized over the last quarter, which is obviously pretty impressive. I think that's good news. I think that means that a recession is not imminent. But let's start with you, Jordy. What are your thoughts? Is this bullish, or is good news now, or is good news bad news? What are your thoughts?
I think we're at the point where there's not much expectation of further rate hikes. You know, we just got one yesterday. Maybe we get one more, but that's it. So good news is good news right now, and I think the equity markets are showing it. Crypto, not as much, but hopefully at some point the boomers throw some of their shekels to us, and we can kind of pump our bags as well.
Yeah, it kind of feels like 30K is like fair value for Bitcoin. There's like not that many buyers above, not that many sellers below. There's like not that much like new retail interest. Like I was kind of hoping the XRP news would bring in more retail and like maybe bid our altcoin bags, but I feel like the current bidders of altcoins, they don't really care whether coins are securities or not. It just seems like there's not that much like overall interest in crypto.
Yeah, why do you think that is? Just people got burnt last year and it takes time. I mean, I find myself doubting this idea that we could just live in these 4-year cycles and that there's always going to be another cycle and it always has to happen on the same time frame. It almost seems too easy, right? Like when everyone's expecting something in a market, like how can that be true? How is it true? I guess, Alex, I would throw this to you. How is it true that we can just live under the assumption that, starting in January, retail interest will pick up again and we'll be in this, the start of a new bull market? I mean, the halving can't really matter, right? Like going from 2% to 1% inflation is sort of irrelevant in my opinion. It didn't do anything for ETH, right?
Yeah, I think it's like an interesting like coordination point for people just to throw money into the asset space. I think historically it has coincided with new innovation entering the space, and like I think at like the current state of innovation in the, at least in the crypto markets and the crypto sort of tech stack, there hasn't been anything that new from last cycle. Like I guess the Uniswap innovation of like giving liquidity to long tail assets, like something of that kind of scale hasn't really like attracted new capital in, is like my opinion. So I think that's the reason why there's like a laggard effect right now in crypto compared to equities and risk. But like we have seen signs of froth in the equities market, like slowly beginning to inch back in. So as Jordy said, like maybe they'll start throwing like their winnings into the crypto casino again.
Yeah, I'm curious. Do you guys all think we need something new to kick things off again? Like, so we had DeFi summer, kicked off a massive bull run, and then that sort of faded, right? But NFTs propped us up. That's my theory, at least, and created all of this demand for ETH. I mean, do we need a new thing at the scale of DeFi and NFTs just to start a new cycle, or will
We just got a new thing? We got Worldcoin. What do you think about Worldcoin? I mean, that's pretty new.
Yeah, I wanted to talk about this because I was having a chat with some other crypto friends, and we were just sort of debating, like, is Worldcoin a scam because the tokenomics are scamming, or is it a real project? I'm sort of the mindset that you have to separate the project from the tokenomics. And I think I think this is a real project. I don't think Sam Altman would risk it all, so to speak, right? He's got a lot going on. He's certainly like a prolific person in the tech space. Why would he risk it all on a scam project that's just meant to dump on retail? It doesn't really make sense to me.
Yeah, I mean, I definitely don't think it's a scam. It's not an intended scam. But at the same time, when you're dealing with cryptocurrency, if the currency part is misdesigned, then your project is, crap, regardless of your intentions. So, yeah, I don't think he's obviously a very wealthy individual that could maximize his wealth through OpenAI, and I think his motivations might be different. But I mean, we should dig into the details of the the tokenomics and what the project is. But I don't know. What do you guys think?
Yeah, I think more about it from like a retail perspective, like capital inflows. Like this is kind of like a mass onboarding process where, it's like, if you think about it, right? Like maybe you meet, like, if you think about like, I don't know, like doing something with your friends, like this is something you can do. It's like, hey, like instead of getting lunch, like let's scan our eyeballs and make it like $50 or something. And I think I saw videos of some Iris, like the orb line at like New York, like there's like an hour-long wait and people are like just spending like 20 seconds per eyeball and like just, doing all that. And like, if it's also built on the base chain, it can also like create new wallets. So I feel like it's kind of priming retail on like the entire market of like, okay, like it's okay to own a crypto wallet. Oh, like there's actually like, I have like $40 on chain or something along those lines. So I think that part is bullish, but I don't really think like the design of Worldcoin is meant to be like something that like supposed to be investable. Like I don't think Sam Altman's like trying to make Worldcoin something to like make people like super rich, right? It's trying to be like this UBI coin. I think, yeah, like I mean the tokenomics is like pretty insane. It's like most coins are going to market makers, and last time I checked, it was like a $30 billion FDV or something, or maybe it was higher.
But let me ask you guys this, right? Like, if the goal is to be a UBI and they want to distribute like a reasonable amount of money to people monthly, do these tokenomics not make sense, right? Do you not want to start with a low float coin that will give like the initial people that have signed up, like I think it's something like $50 a month for doing it. By the way, as a side note, tomorrow I actually have an appointment to scan my eyeballs, so I'm not personally concerned. Yeah, I'm not concerned about the privacy issues. I mean, I use Face ID 20 times a day on my iPhone. With Microsoft Surface laptops, I've used their Face ID or scanning product. I have global entry, so like when I go through the airport, there's some facial recognition. Like I don't think this is the place to draw the line, if that makes sense. I think this is something worth trying as a user.
Yeah, I totally agree. I mean, I think I like almost view, like, I guess in response to like your tokenomics point, I almost view like these crypto projects as like trying to create like a network effect. And like, I guess you can almost view it as sort of the economy of like a nation state, where like the total value of the token is kind of like maybe like their GDP. And I think like at the end of the day, like a strong token price will attract, I guess, immigrants to your state. And we see this like issue with Sol, where like because of Solana, with like such, because of the huge, I guess, overhang of FTX supply, it's been hard to like convince people to like move essentially to that country, and go in and build in Solana, learn a new language, and basically like, immigrate to the country. And like, it does have a huge effect. So like making sure that tokenomics is like very set well from the very beginning, in my opinion, is something that like I think we've learned from the previous cycle, is like this thing can really bite you in the ass if you give away too many tokens in a concentrated amount to like actors that aren't aligned with you. So in a way, like opening up this project in a way that like market makers that are very aligned because of their call option, we can dig into like the exact details later just for the readers that aren't familiar with it. But yeah, the market makers that hold 100 million tokens out of the 110 million circulating, they're very aligned to keep the price up, which will attract new users, and they can basically have the only source of supply come in as like new users that are onboarding and scanning their irises essentially.
Yeah, I found this thread from Matt here. If anyone wants to chime in, feel free to. But you can see some of the metrics here. So 43 million world coins were airdropped. 100 million world coins were loaned over 3 months to non-US market makers. So you can see here that market makers controlled 95% of the float at launch. Anything you guys want to add there regarding details? I mean, certainly that's a very high outlier, right, relative to other token launches.
I mean, it's true that they've set a benchmark price starting from $2, and we do see that the price is, by some magic, trading around $2, a bit over $2. So there's definitely an effect of that. Now, whether this is, the important part of the project, I don't think it really matters. It's a 3-month loan. It's not like this is the long-term holders. This is kind of like the temporary games being played, and I'm sure there's some heavy bags that can get made if this thing starts to pump and people start like gamma hedging, because they don't have to return the tokens. Basically, like at $2.80, they can keep all the tokens and just pay back $2.80 per token. So if you sell some at $4 or $5, you've made millions of dollars. So that aside, I have a lot of concerns about this project, and people, I've called out let's say like Olympus DAO and Axie and Luna in the past, and people always ask me like, what's the next one? And for months now, I haven't had something to like point to, but now I do. So I think Worldcoin potentially will be the next Luna. And the reason I say this is like, you have a similar thing where it just tries to make money out of nothing, like base money. What is base money? Oh, it's Worldcoin. It's like a new currency. And like, what exactly, like what is backing this? Like who's going to be on the bid of this thing? It's very unclear. It's basically like VCs and people that see that there's, millions of people signed up. And so you kind of have this like VC inflow. This is exactly what happened with Axie though. Like third world country civilians were making $50 of which is a lot of money for them, by participating and making metrics look good, which then get passed on to VCs. So, not to shit on any like VCs in particular, but this to me seems like the kind of thing that can grow into a bubble and then just like burst when people realize like this thing is not backed by a government and it's not Bitcoin, which is, digital gold. It's just some random coin. Like, what are we doing exactly?
So is your point like there is some value in bringing identity on chain and being like the base layer for that, which is what they're doing, but it's not even close to the 23 billion fully diluted valuation that Worldcoin's sitting at? Is that the theory? Like there's something here, but like it just doesn't make sense at this valuation? Or
no, my theory is like this doesn't need a token. Like if it's a technology company that is giving other companies, it's a B2B company that says, hey, like we've scanned 1 billion people's eyeballs. If you want to interact with them in a way that's like Sybil resistant in the digital world, you do airdrops or things like this, you can do it through our system, and we'll charge you 20 bips and you can do whatever you want. That's a great business. It doesn't need a token, right? Like
sure.
The point of the token is to give investors money back, maybe, but so then that's all. I'm kind of also okay with that because you're funding the whole thing. But the problem I have is this UBI vision. Like, first of all, it's very I don't know, like it's kind of imagining this world in the future where some AI has made countless wealth and we need to redistribute it to everybody because like everyone's poor, and like some Altman and like Elon Demis Hassabis, have like $100 trillion and everybody else has nothing. And then as our overlords, they're kind of like sprinkling in some WLD coins, whatever, to people. This is the only thing that makes sense, right? And
it's kind of beautiful.
It's like a hedge for that.
Is it not kind of beautiful?
Sure. I mean, I don't think that's a reality. I think what's going to happen is like the U.S. government and the Chinese government are going to start, making these technologies classified, and it's going to be like some kind of Cold War stuff. And the governments themselves will control the wealth. Like they have the military and they have like the intelligence agencies. So if they decide to give money to their people, they're going to do it through their CBDCs. They're not going to give it to like people in other countries. I don't know. That's how I see it.
They can't airdrop it in a lot of restricted countries, including the U.S. right now. So like I guess they've basically explicitly stated we're not going to touch your citizens. But I kind of view it as a way as like, oh, I'm going to build like like Sam Altman is going to build a nation state, and these like the financial rails where he can distribute like money to his serfs.
Is it his money? Like whose money is it? Like who's going to be on the bid?
I mean, if you control the supply tight enough and you create like a meme that's strong enough, then like eventually it will have value, right, as a token. I started off with like a very pessimistic view when I shorted like Worldcoin at like 2.5-ish. I covered it 2, and then I started thinking like when it didn't go down, when it did break down from 2, I was thinking like, what, maybe this thing has a future. I don't know.
Yeah, I guess like bubbles form when you don't know how to like value something, right? Like Jordy, would you be more for it if, for example, instead of tokens, it was like a soulbound NFT or like a soulbound token where you can't really transfer it? It's like you just, after you verify your identity, you get this NFT or soulbound token, and that kind of verifies your identity. Like do you think that's like a better model, and like they just did a token for like a VC exit?
That's a better model. The currency aspect is my main concern. This thing can start gaining monetary value because nobody still has figured out exactly like why does ETH have monetary value but not Solana? Like there's these things that we're still kind of figuring out as a community, as a society, as digital natives, and it has the potential to start like bubbling up where people think like what matters is number of holders, and it has 1 billion holders at some point, so it just has value. And I have a concern around like the volatility of the price, and why are we creating a situation where, I don't know if you've seen, but people are selling other people's eyeballs now. Like, if I want to go around like my village and scan everyone and then package that up and like sell it to like hedge funds like in New York that want to, oh, I'm just gonna, today we did a tranche. We bought a B tranche of 500,000, prime eyeballs from Southeast Asia. Like that can happen, right? Like this is kind of what we're designing.
That's
Yeah,
not bad though, right? Like if like these 500,000 people like make some money, if they opt in. I mean, I don't know like why they would want to do
they're
that.
Screwed, right? If WorldCoin actually works, then they've lost the ability to participate, right? So
I guess so, yeah.
it seems like an unsolvable problem. I agree with that. It's like an extremely complex problem of how do you, yes, you can prove that someone's a human, but you can't prove that they still own that account, right? That's sort of like in my opinion, like one of the biggest issues with self-custody, right? Like we can't all be issued a private key at birth, whether it's with WorldCoin or some government chain, because you can lose your keys, right? Or you can sell your identity. So it seems like I just don't know how they're going to go about solving that. And it doesn't seem like they have a plan yet.
Don't you just have to keep scanning your eyeball? Can it just like do a photo recognition of your eyeball from the app and just make it so that every time you want to sign a transaction, just scan your eyeball?
I wasn't aware if that's what they're doing, but that seems like a smart plan. I don't know, Jordy, you're shaking your head.
Well, I mean, that means they need to keep scanning you and verifying, like, then you start getting into the privacy and the data aspect.
Yeah.
It's definitely not, it makes sense. Like what he's saying would be better as like a wallet kind of thing. But, right now I think the design is like they don't keep that data where they can keep verifying, right?
Oh, they said they delete the eyeball data, right? Okay.
But they have some unique identifier.
All the app would tell you is that like you are part of the program, but they don't know if it's the same person that scanned it today or tomorrow.
So
like, would it be able to offer like under collateralized lending? Like if you're like a digital identity is like under a certain bucket, and you verify that like you're a good actor in this space and you have X dollars of wealth, then can that enable like other use cases of crypto that currently is like unsolved? Because right now, like under collateralized lending, like it only works for like KYC like parties, right?
It wouldn't
like,
help for this because, I mean, all this does, like, you can read like Vitalik's post about this, but it's just kind of like a binary, like yes, no, has this person scanned their eyeball? The soulbound NFT idea that you have, is maybe more aligned with starting to differentiate different types of NFTs and different types of behavior. But no, this wouldn't help on that side.
Also, to Jordy's earlier point, right? If you can sell your identity, which people will do, and I'm sure I've actually read reports that people have done that, right? Then you can, like you could imagine someone that's a scammer buying up 1,000 different scans, trying to see what under collateralized loans they can get, and then once they're on chain, there's nothing keeping them there, so just dip out. But Alex, you were saying U.S. people are blocked. When I scan my eyeballs tomorrow, does that mean I'm not getting the $50 stimulus each month, or what's happening?
Yes, it's odd. I can go verify, but like I thought U.S. citizens weren't allowed to scan their eyeballs. Or
I think you can scan. You can scan, but you don't get the coin because it's securities law. It's not. Yeah. But you can scan. I think you can be part of it. But yeah, you might not get your $52.50.
So no 25 world for you.
So they match the identity to a nation state then? Because I thought they were just like scanning your eyeball and there's some unique identifier attached to it and it gets paired with your WorldCoin app account. But you're telling me I can't just run a VPN on my phone but they always know I'm a U.S. citizen or U.S. resident?
I mean, you're the only one out of us that's going to do it. So you're the one who's going to be an expert. Tomorrow you'll tell us.
You might be forced to.
Huh?
You might be forced to if this is the income of the world in the future.
Yeah, I don't know. I mean, if this is supposed to be an inequality project, I understand the sentiment. Like I've been talking about inequality being like the topic of the next 10 years consistently, and I really believe that this is going to be a huge problem. And actually, like all these GDP numbers we talked about and stuff, this is just because they've created more inequality, right? Like they've like backstopped the banks, all the bond buying, 1-to-1 par. You get all your money back, even though you've had losses. This creates like more like inequality. So ultimately, like looking for solutions is really important. And this is, I have to give them credit. Like this is a solution that's been tried. I don't think it's going to be a good solution. But I appreciate the idea, and I think we're going to keep talking about Worldcoin for years to come, because this thing, I think we'll at some point get into bubble territory, and it'll be something that we'll have to evaluate quite a bit.
Nice. I think this topic is on a similar vein for what we wanted to chat about next, which is real world assets. I know this is a topic close to your heart, Taiki. I know you've been doing a lot of research there and publishing a lot of that on your YouTube channel. Do you want to just give us an overview of what's happening in the real world asset space, where you think it's headed over the next couple weeks and months and whatnot, and then we'll dive into it?
Yeah, so I've been doing a lot of thinking on like what can actually end like this DeFi bear market. And if you think like fundamentally, like in 2020, the bull market was started because Fed cut rates to zero, and then people went out the risk curve seeking higher rates, and capital flowed on chain. And then as soon as the Fed started raising rates, capital fled the chain, because now you can clip 5.25 in short-term T-bills, and it's basically impossible right now for DeFi to compete with that. There's like no on-chain strategies that you can do in a safe way to offer like 6, 7, 8% without taking on like crazy smart contract risk, and most of that is like subsidized anyways by like token inflation. So I was thinking, okay, like how can DeFi actually compete with the risk-free rate? And I think there's some cool things happening with like the real world asset front, where there's a bunch of projects tokenizing T-bills on chain. And right now, like Maker is like one of the bigger ones doing this. You can currently stake DAI and earn a 3.49% with a DAI savings rate. And of course, it's not perfect, right? I mean, like the DAI is taking some of that themselves. There's like Block Tower that's taking like 1%, and it's not really that efficient. But if you kind of think about it, right, you can actually take these tokenized T-bills, maybe collateralize it, and like do these various looping strategies where maybe if you like loop it like 5 times, you can offer like a 10% stablecoin yield, and you know exactly who the counterparty is. And this can actually scale, because like Maker can keep buying T-bills, other projects can continue to buy T-bills, and I feel like we've been in this PvP market where we're like just trying to take money from each other, especially with like new retail interest. But I feel like with tokenized T-bills, you can actually create like a PvE market where capital is flowing from off-chain sources like the U.S. government interest payments directly on chain, and I feel like this can actually like not immediately but slowly catalyze like a DeFi bull market and kind of create like this multiplier effect where like money from these interest payments can go to on-chain like stablecoin holders, and then eventually like that money's going to flow into like other coins, and then slowly create like this like economic multiplier on-chain effect. And it's kind of like an idea that I've been toying around with. I'm pretty interested in hearing like Jordy's thoughts, because I know you like. I mean, I really appreciate like your like.
Yeah, I mean, look, this whole topic for me is what we experience in crypto. And like, for example, Ethereum, right? You have staked Ethereum, and 30% of people are staking whatever number is 25%, and they're diluting like the other people because they're getting rewards. And this is exactly what is happening with the U.S. government. There's this 5%, 6% coupon. If you're not staking, then you're just getting diluted compared to everybody else, and they're competitively like making real money against you. And so like the $50 to $100 billion of stable coins that's being like stuck in USDC and USDT, we're just kind of getting diluted by, in this case, the Circle and Tether, who are kind of making the profit. But everybody who has money on chain in stable coins is getting diluted. And so what we're starting to see now is like a bridging of the gap, because people are like, well, you got to give me something, because otherwise, like, I'll take 4% and maybe you can cut 1%, but I need to get something. So we're seeing a variety of projects, and I'm advising the Mantle Treasury right now, which is the XBitDAO Treasury, which has hundreds of millions of dollars of stable coins, and we're looking and evaluating. Like, there's quite a few coming to market. I've seen like 3 or 4 recently that are doing the legal work to actually be able to provide a whitelisted version of on-chain like yield, basically. And the cuts are very reasonable. Like, I've seen 10, 20 bips, like very, very, very small cuts. So you actually get 90% of the yield or more in some cases. Now, like, a lot of these are whitelisted, so you have to KYC. And there are projects that are potentially trying to bring this to retail users. It's a little bit tricky, but there might be a way that you take the whitelisted asset, which is going to be in a curve pool, and the curve pool will be like only accessible to KYC institutions. But those institutions can potentially interact with it and then issue a wrapper token that is accessible to retail. So there's some like legal mumbo jumbo, but you're basically creating enough loops where it becomes legal to provide this yield to any degen that wants it on chain.
Yeah, it's like Nexus Mutual, their NXM token is a security, but they just have a wrapper for it, WNXM, and it's freely transferable, but it does trade at a pretty significant discount, I think, for some reason. I wanted to throw to you and Jordy and Alex. So I know Taiki's bullish on the Maker token itself. One thing I've been thinking about, and I'm probably just middle curving this, but like, how can a project where its sole source of revenue is from the risk-free rate outperform the risk-free rate when it always is like has fees that it's going to earn less, right? Like the treasury is earning less. They're paying out a 3.5% DAI savings rate, but that's actually going to scale up to 8%. There's going to be a variable DAI savings rate. In addition, they have to pay the actual custodians a fee. So like, are you just betting on Maker, or is the bet here just that the narrative around Maker is positive, right? Like, how can the coin itself, where its only revenue source is T-bills, outperform the T-bills? What are your guys' thoughts there?
Yeah, I can answer that first. Like, I don't really view Maker as like a 9-month, 12-month hold. It's more so in the short term with the lack of retail interest, with like new capital inflows. I just feel like the narrative around the Maker is pretty strong. Just having this one-way capital inflow that's predictable, consistent. I think the market does value that. And there's also like this narrative around like the end game that Rune, like the founder of Maker, talks about, where okay, we're going to rebrand Maker, we're going to rebrand DAI, we're going to do a token split, we're going to introduce like these sub-DAO farming where you can stake Maker, stake DAI, and earn all these like new governance tokens. And like personally, like I'm kind of thinking about like selling the news like roughly when that happens, like, or not, like, if not before. It's just more like a multi-month swing for me. I don't really expect Maker to like outperform like whatever is pumping on any given week. But I think when there's like macro uncertainty around crypto, especially with like the Bitcoin ETF, outcome happening relatively soon, people often fear like the Binance DOJ indictment and whatnot. I just feel like in the short term, like Maker is kind of like a defensive trade, but with the sub-DAO farming and the end game, I think it can also be viewed as a defensive, yet like it's like semi-momentum driven, because Rune is like really focusing on growing the circulating supply of DAI. And I think, like with the enhanced DAI savings rate, I think that's actually possible. But that's kind of how I view it. It's not like, I don't really intend on like holding Maker for like 12 months. It's more like, okay, like maybe into Q4, something along those lines.
Vicky, how long does Shimmer Capital hold coins? What's the average holding time?
Probably like 3 days to 2 weeks, I'd say.
Wow.
Maybe shorter, maybe an hour to 2 weeks. Definitely
go.
nothing long. But a question for you guys. Like, I don't understand how you can get how you can reg arb the non KYC part of basically just getting treasury yields on chain. I mean, it seems like the moment like Lazarus Group or Bearish starts getting yield on his stable coins, like it kind of just topples the whole thing, right?
So you have like the entity that's actually custodying the treasuries and issuing the token. So they're they can put the treasuries in BNY Mellon, whatever. Like they can choose some custodian and they can issue the token. And that's all regulatorily like legal. They get all the services, and they say that only KYC people can interact with this. So
they can like mint redeem.
Yes, mint redeem. Like they're the only ones doing it, and only like KYC institutions can mint redeem. Now
Sure.
you can have some like DeFi protocol that says, okay, we're going to KYC, so then we can interact with your token. We're going to buy a bunch of your tokens, taking money from retail to do it, and then we'll give them a receipt token that we've issued. So this is kind of like the ARB. So the person minting, redeeming from the U.S. government directly is not interacting with retail. There's this like middle layer. So that's the thing that we might see.
Yeah, and there's also, sorry to interrupt, but there's also like protocols like Flux where you can lend out stablecoins to these KYC like parties, and then maybe these KYC parties are willing to pay up to 4% to borrow stablecoins to like clip that arbitrage. And that's like one way to like allow permissionless like with the risk-free rate ARB. It's never going to be like, like 5%. It's going to be on Flux right now. It's like 4%. But if you compare it like that to like basically zero rate, I mean like Aave rate is like 2% and whatnot. I think that's pretty attractive. And as this happens, like as the market becomes more efficient and competitive, it also should increase like the lending rate on Aave, right? Because if you can borrow DAI for 3%, stake it for like 4, 5, 6%, then it's gonna bring the on-chain yields just up. And I'm kind of betting on like this slow process to eventually bring in new money. And that's kind of like my idea that I have for the beginning of the DeFi bull market. Maybe it's like a multi-quarter, multi-year thing. But I think, the point is we see like the light at the end of the tunnel. This is my hopium.
Makes sense. But like, I mean, it seems like the loophole shouldn't work, because you could own a bunch. You could literally own SP500. You can issue a token like a KYC person, and then they can just resell it and wrap it. Like, it's not. I feel like that would like obviously get some regulatory ire. Like, why does it work for treasury securities and not like just regular equities, for example?
That's a great idea. I think someone's gonna probably do that, in the next 6 months. Like
Actually,
because like
I know a few protocols doing it.
Yeah, I mean that should be like, that's a good idea. There's no reason why not to do that. Apart from the fact that it's a lot easier to get access to S&P 500 through, like interactive brokers or through like some other CFD kind of provider than it is to get like actual treasury yield. And so maybe the need is not as high, but
I don't know if that's true, Jordy. Like, I mean, in the States here, anyone that uses basically any financial services company, like your money is held in a money market fund. Like I use Fidelity, right? And it's just automatically put in a Fidelity money market fund. I think it's called SPAXX, and it just buys short duration treasuries, right?
Yeah, but this is not, I mean, the whole point of all of this, I think, is 100% not for Americans. Like, this is to give access to like Eurodollar users across the world. Yeah.
So is it not possible to buy, or is it much harder to buy T-bills as a non-American? I mean, what's that process like for you guys?
I don't think the process exists. I mean,
wow,
you can. It's hard, and like buying a treasury bond, these things are like $1 million a clip for like one bond. If somebody just has 100K, they just want to get some yield on it. Like this is actually a good use case for crypto, and it does make sense to have something that charges 10% and lets people around the world have access to dollar yield.
So you're an advisor for the new BitDAO protocol. They renamed, correct? So can you share a little bit about what you guys are thinking there? Or?
Yeah, I mean the Treasury has been holding about $1 billion of ETH and stable coins and not getting any yield on it for quite a while now, many months, and there are safe ways and legal ways where you can start getting yield. And for the stablecoin side, like we're talking to all these people that are, I don't want to show a specific one because there's 3 or 4 or 5, but there are several that are doing all the legal framework that can start to offer direct access to those yields.
Very cool. Awesome. So we wanted to save the last 5 or so minutes of this podcast for a segment that we're experimenting with called How Degen Am I for doing this. And so we all came with, something we've been interested in over the last couple of weeks. It's more on the fun side. For me, last week I was on our company offsite. We went to DC, and I think on the last day of the offsite, we discovered hamster racing, hamsters.gg. And we all just had a blast betting on these hamsters until we found out that the races are pre-recorded, and that sort of like took away all the appeal for us. Did you guys participate in this at all? Is it too degen for you guys?
I have not participated, but I've seen it on crypto Twitter or crypto X now. I don't know what we're calling it, but I've seen people talking about it. That's pretty degen. I don't know what number do you guys have out of 10 for how degen hamster racing is?
Like, it is 5 like.
I think 10 is like. What was the other one? There's like cockroaches or something.
Yeah,
maybe that's pretty high.
Now.
I guess hamsters are. It's kind of wholesome. I guess you can kind of, maybe it's like some type of animal abuse, but like if you think about it like purely from like a degen perspective, like if the dev's making money, then and it's creating economic value, right? Like Justin's willing to pay money to feel dopamine, then I guess
We're
it's
talking
like-
about hamster racing, and it sounds pretty Degen to me. I wouldn't put it quite at cockroach level, but I don't know. Give it a number.
I'll give it a 5. I'll start with 5.
Oof, that's low.
That's pretty low. I would have given UST an 8, right? So this is less degen than UST.
That's low.
Well,
That's
if you
low.
start with an 8, then like for future topics, like
Okay,
the
I mean, tell
benchmark
us what's been like your Degen activity, Taiki.
Oh, okay. I don't know how degen this is, but are you guys aware of like virtual AMM, like VAMMs, like on chain?
NFT
Yeah.
perp.
So there's a bunch of these NFT perp dexes that is clearly not like sustainable. And there's like this degen play that I've been doing where like I don't really expect like NFTs to pump a lot, so you can basically short like Bored Apes on low leverage and collect funding directly from like the team treasury. So it's kind of like this RFV play. And I've just been doing this for over a month, and I made like 3 ETH, like like just pretty low risk. There's like the risk of the VAMM blowing up, but I'm like, okay, like if it blows up, then I think the team will compensate me. So I'm literally just trying to arb like the ETH like insurance fund by shorting
That's like
Bored
a
Apes.
1. That's not degen at all. That's just like standard DeFi behavior.
I guess, yeah, okay, sorry about that. I need to be more degen.
What's the
I'll think about
TVL
something.
protocol?
There's right now the only one that exists is Tribe 3.
You're shorting the floor of Bored Ape Yacht Club.
Yes, and everyone's
Mm.
short, but in order for the price on the VMM to like, I guess like match like the Oracle price, like the system has to incentivize new shorts, and the only way to do that is by paying ETH from their treasury. So like everyone's like,
it's kind of like a funding rate, basically.
yeah. So as long as Bored Apes don't pump in price, I can actually share my screen actually.
I pulled it up here too.
All right.
Interesting.
Wow. It's gone down to
99% short. Okay, it's not a 1. This is higher. I misjudged. That's crazy.
Yeah, like
That is
everyone's
so
doing this,
funny.
and then all it takes is one like degen to like say fuck it, like I'm gonna liquidate Taiki and like just like ape like 100 ETH worth of like buy pressure for this, and then everyone blows up. But
I mean, I hope Machi Big Brother is not watching this, because definitely possible. Okay, I mean, I would give this a solid 7. Although I have
sick.
I have the hamsters as higher. I have to say, I don't know if you
Okay.
5 there.
I think the hamsters are higher in retrospect because the devs rugged the project. So it's like, oh yeah, it was obviously a scam.
Yes.
Did they rug it? I mean,
Yeah,
the
the devs just they started selling the team tokens like secretly. They tried to.
Oh, that's right. I thought you meant like they were, because so the races we found out in the first line of the white paper, which no one reads, they actually admit, like credit to them for being honest, they admit that the races are all pre-recorded. And so like they know the outcome, right? And like presumably like they could just be betting the winner every time in like some small amount and capturing value that way as well. I thought that's what you meant by rugging. I didn't, I think it's a little less bad that they're just dumping their token. That's to be expected, right?
That's to be expected. Fair enough.
They're not dumping it. They are they're doing a OTC transaction at the fair market value with DWF Labs. That's what they're doing.
Yes.
It's very legitimate. Have you been doing any degen activity, Thicky?
I've been they're because of I think you like see sort of signs of froth when like market can't go down, so like, you can start playing these fun little mini games that like don't get really punished for being overextended in. And like one of the examples is you've seen this return of like this market manipulator sort of targeting these like dead coins that have like a really hard to borrow sort of lower market cap. So earlier this week there was A Gold, and then there's STMX, and then there's KNC. Essentially, there's like these dead coins that have maybe like $70 million market cap. They like buy it really slowly. They start accumulating spot so that like the perp starts lagging behind spot. So people that are short have to pay funding because the funding is negative because like spot's been leading. And like in the first few days, like people are like, some guy's an idiot just buying. So they're going to short the token. And then towards the end, they ramp up and they just buy a ton of spot until like all this OI builds up. And finally, they manipulate the price high enough to where like all the shorts get liquidated. And then they like start selling all their spot again. So we saw it with A Gold where it went up maybe like 100% or so.
You mean Adventure
Um,
Gold, the loot derivative project?
Yes,
Holy
yes,
crap,
exactly.
that's a throwback. And that is a useless coin. Wow.
It is. The first I was short of Venture Gold, and like I took a small loss in that one, but then I saw like the meta happening, and they like rotated to a different coin, so I was able to catch the long side of those ones. But yeah, it was kind of just fun just playing the market manipulation game there.
Where do you watch for that? Like, where can someone like a normie like me find that information? You just got to know the markets.
If you look for the biggest movers every day, typically like the ones that move like 40-50% of the day are like, kind of scammy coins.
Yeah, it's a dangerous
Yeah.
game, right? Like this kind of, it's a pure bear market stuff where people try to find what coin is safe enough to start playing these games. Because if you choose one where like there's a treasury that's actually ready and willing to like sell, then during the accumulation phase, you just get dumped on by like the big token holders. So you got to find these ones that like no one's really gonna get in the way and just like, let you play your listing games.
Well, Figgy, you got to let us know. DM us when the next thing is coming up so we can participate too and have some fun. But with that, I think we should close it there. I had a blast. It was a pleasure doing this with all you guys. If you guys liked the video, the viewers, make sure to subscribe, like the video, and share it with your friends. We're going to try to do this every week now, and we're still learning. So if you have suggestions, drop them in the comments. We'd love to learn from you and get your feedback. So thank you guys on behalf of all of us. It was an absolute pleasure, and hopefully you enjoyed the first episode of Steady Lads. Bye, everyone.